Oh, is that an accidental hint? Okay. So welcome everyone. We're so glad you're here for the MIA's fall property and casualty industry meeting, where we have a number of updates from you, and we're also planning to cover agenda items that folks sent to us in advance. If at any time you, first of all, please, if we want this to be as interactive as possible, so please feel free to put questions in the chat. If you would like to come over and speak directly, raise your hand and Craig will move you over to the panelist section of the webinar so that you can ask your question and interact. I'm really grateful for the engagement. It's fantastic. It looks like we've 110 folks on the call, which is just great from all different aspects of interest in the property and casualty industry. So without further ado, maybe we'll go around the horn, introduce the MIA team, and then jump into our agenda. So I'm Marie Grant, I'm Maryland's Insurance Commissioner. I'll turn it to Joy to introduce herself.
Good afternoon, everyone. Joy Hatchett, Deputy Commissioner, and also acting in the role of Associate Commissioner for P&C while we are filling that position.
And Jamie.
Good afternoon, everyone. Jamie Sexton, Associate Commissioner of External Affairs.
Van.
Yeah, hi, Van Dorsey, counsel to the MIA.
Ivy.
Hello, Ivy Warren, the Chief of Staff for MIA.
Mary.
Mary Quaid, the Associate Commissioner for Market Regulation and Professional Licensing.
Riley.
Hello, Riley Williams, the Assistant Director of Legislative and Regulatory Policy.
Craig.
Hi, everyone, I'm Craig. I'm Chief of Communications and Public Engagement at the MIA.
Joyce. Oh, you're on mute, Joyce.
Sorry, Joyce Peach, Assistant to the Deputy Commissioner.
And Katie.
Katie Callahan, I'm the Director of Regulatory Policy and External Affairs.
All right, great. So that's the MIA team here. And then I think we also have some folks in the attendee list as well. So we have all our SMEs here to help answer any questions. I am going to turn it over to Ivy and Joy to give an update, first of all, on the new complaint system that we are working towards implementing this fiscal year. And then second, talking about some carrier response time issues and some requests from our team as we work through some of our complaints. So I think, Ivy, are you going first?
I can go first. Is that good, Joy? Okay, so I'll go first talking about the complaints system. So hello again, I'm Ivy Warren, Chief of Staff, just started in February, but I've also been working closely with the team that is implementing the new complaint system for MIA. So we are in the process of creating a new system that is going to be built on the Salesforce platform. We're currently in the process of building and testing the system. We have some units that are fully in Salesforce and others that are still going through the transition. So as we move to create this new complaint system, we plan to include some of the carriers to really get some good feedback on the process and how it is for them as far as usage. And that feedback we're going to ask for in early 2026. So prior to the MIA going live in this new system, we do want some feedback, but we are going to provide some training and resources to carriers and those who have to use the system in the future so that there will be a smooth transition. So that's something we've been working on for a few years. We're pushing towards the new complaints portion of the system, and we are looking at 2026 for like I said, the training, the resources, and getting some feedback. So that is it on the new complaint system. I'll pass it to you, Joy.
Thanks, Ivy. So I'm going to talk a little bit about some of the requests that we've had from our division to basically shorten some of the response times. But before I do that, I really want to try to level set and let everyone on the phone really know what's happening in the P&C complaint division, because I know there's been some concern about the age of complaints, the volume, and things of that nature. So Craig, if you could share the first slide, please. And while Craig's pulling that up, what I really want to show is the volume of complaints. Go to the next slide, Craig. So if you can look at, and this is just from 2020 through 2025, and it's broken down into 3 subsets. Our P&C General, received and closed, our private passenger auto, received and closed, and the rapid response. And if you can look at this, and also for 2025, note that's only as of October 31st. We still have 2 more months to go. The number and the volume of the complaints that are coming in the door is steadily increasing. That means the work of the MIA team, and I'm sure just like the work from your different teams, is steadily increasing. And it takes a lot to get the files closed because, as I'm sure you all have noticed, the complexity of the issues has increased, and also the passion that some of our consumers bring to the table when it comes to either cancellations, rate increases, issues with claims. All of that has increased. And I'm going to show you a slide in a little bit that'll show you how much that has increased. Next slide. So this is a chart of the number of hearing requests. So once we finish that investigation, our work on these files is not done. This is the number of cases. We close the file and those passionate consumers still aren't happy, so we have to handle the hearing portion, which also is not just writing a case up for hearing, it's taking the phone calls from the consumers related to that hearing. And then the next thing that I want to show, next slide, Craig, is we currently have 3 CSRs that are housed in our CEAU unit that handle calls. So this is a consumer that calls in with a question or an issue. From the period of August 13th, 2024 through November 5th, 2025, they've handled over 7,000 phone calls on all of these different issues. Next slide, Craig. This is a general, and this is not all the reasons, but these are the top reasons that our staff receive complaints. And you can see they're all across the board. Claim denials, premium increases. So we're expecting our team, and they do it very enthusiastically, but to be masters in many, many areas. And so I just like I'm sure you applaud your folks on how hard they work, I just wanted to take a minute to share with you how hard the complaint team is working to help your customers with the various issues and concerns that they bring to the table. Now, that said, one of the things, because we realize that some of our complaints here have some age, and been trying to figure out the best way to handle the age and to move complaints along. And so what we've tried to try out with the companies is not on the first request, but when we come back and ask for additional information, we're asking that some of those responses, not the really complicated ones, sometimes we just need additional answers to a couple of questions. So instead of coming and saying, please give us a response to these 1 or 2 questions, and you get 15 more days, we're trying to shorten that to either 5 or 10 days. And the reason for that is we think if we can get those responses quicker, then we can get these files closed quicker. And then also remember that originally that 15 days was when we only did things via snail mail. Now, for the most part, your responses come in through the portal, so they're instantaneous. So we no longer have to wait for snail mail. So the 5 to 10 days for us truly does seem a reasonable amount of time. And as you all know, any of you know that if for some reason you can't make that 5 to 10 day additional time, just pick up the phone or send us an email and ask for an extension. So I'm hoping that that will help. Any concerns, just giving you an explanation as to why we're doing it. And if you find that you can't meet the new deadline, just ask for additional time. So that ends that portion, because there was a specific question about why we were moving to less days. So, Commissioner, I don't know if you want to stop there and take questions, or if you wanted me to go ahead and start talking about the rate filing portion.
Yeah, let's go ahead and take any questions. There's already a question in the chat from Robert O'Leary, who's asking about the percentage of hearings. What percentage of hearings is the finding the insurance carrier didn't handle properly? I don't know that we have that on the top of our heads. I will say, I guess I'll say it is rare that if our examiners didn't find a finding of fault, that they get overturned on hearing, but I don't know the exact percentage. But the hearings process is something that's baked into our statute. I think Van can keep me honest here, right? So it's not like an option. We have to offer folks the right to a hearing. There's a question of, is that business days, the timelines for complaint response, I'm assuming.
Currently, all of it is working, but as I said, if you end up with a problem with the days, just reach out to the investigator and that can be handled.
I see Nancy's moved over to join us. So Nancy, did you have anything you wanted to raise?
Thanks, Joy, for just bringing us some more information. I know that we had brought this to your complaint unit, I guess about a month and a half ago, on notices of premium increase. I think that the response time, and you're telling me now that it's on the second request for information. I think for those, they went from 10 to 5 days. But you said if it's a more complicated pattern, they'll take it maybe from 15 to 10.
Not quite, Nancy.
Okay,
First request for information, carriers always receive 15 days.
thank you.
The second request, we would ask for the information in either 10 or 5 days. There may be opportunities where on a second request, if the only thing we're asking for is a copy of the policy, we may ask you, can you get it to us today? So it really is a case by case, but in any instance, if you can't meet the deadline, the carriers just need to let the investigators know. And I want to say this, I think if the carrier doesn't respond to that first request, then there may be some issue. But that's a whole different, I'm talking about carriers that have responded. We look at the response and either inadvertently they left something out, or they haven't responded to all the questions, or their response requires additional information or explanation.
Thanks, Joy. I appreciate it. And I know that none of my members are in that bucket, that one bucket. So
Oh, you do. We can
I
talk
really
after,
believe that.
we'll talk after the call, Nancy.
Even the best actors have an off day, Nancy. So there's a comment from Wayne in the chat about an ever increasing problem in the industry as a whole as insurance companies failing to provide a substantive reply to any communication and asking about what's being done to hold the insurance companies accountable. I think from our end, and I would ask my colleagues, Mary, Joy, and Van to jump in here, but certainly it's our expectation when we have complaints that insurance companies are responding promptly, right? As the previous numbers have shown, we receive thousands of complaints. We enter orders and recover money for consumers routinely through our PNC complaint process. And then if there are trends that we are seeing of behavior that may not just be a one-off, but indicate some broader issues, we can and do conduct market conduct examinations and require our carriers to have correction plans and be subject to pretty large fines in some cases. So did I miss anything there?
No, you hit it right on the head. I mean, not only can fines be instituted on an individual complaint, but they also can be instituted from the Mary Quay's section, the market conduct.
So, okay. Mary, did you have anything to add or?
Just to add that we routinely work with complaints on issues, and we will definitely look at things. And if something comes up through a complaint, then it is not a self-report. It's not getting special, more cooperative handling because you brought it to our attention. It is something where we will consider and impose penalties after restitution is made. And part of the penalty consideration is always how cooperative the company is as an indication of good faith.
Yeah, Wayne, we have our orders once they're made all on our website and searchable by company. So I don't know that we have the numbers off the top of our head, but we've recovered millions of dollars for folks just this year alone. Okay. I want to, we have a full agenda So let's dive right into the rates and forms discussion. I'll turn it back to Joy.
Thanks, Commissioner. And so just like with complaints, I want to do some level setting for the rates and forms side of the aisle. So we hear companies basically indicating that why does it take so long to get our rates and our forms approved? And I want to start, and you're going to be looking at this chart backwards. So this will tell you, the top of the chart tells you what new filings come in for a period of time, and then how many files are closed for that same exact period of time. So you can see, for instance, for the period of October 27th through the October 31st period, we received 7 rate filings. And then for the period for October 27th through October 31st, we closed 9 filings. So for that entire period of time, because remember, there are lots of pieces to every filing. You've got rate filings, you've got rate and rule filings, you've got rule filings, you've got form filings, and you've got files. And each document has to be reviewed. A determination has to be made whether it is in compliance with the law, and to the extent that a rule or a form impacts the rates, the form filing folks, those analysts have to work directly with our actuaries. So there was a point in time where a lot of the filings sort of just, I don't want to say they weren't reviewed, but they weren't reviewed as closely and carefully as our team is doing currently. As you all know, the policies and the terms are far more complex, and the rate review and the models are far more complex. I'm extremely happy that Commissioner Grant has been able to give us the resources so that we can get a strong actuarial team on board. And Aaron and his team are doing an excellent job reviewing and asking appropriate questions where it's necessary. But we all have to realize that when you do that deeper dive, it takes longer. That way, we're assured that when something hits the streets, it's gone through that appropriate review. Craig, if you can go to the next slide, please. So this is going to show you over time what from the middle of September through the beginning of November, how much has passed through this rates and forms section, and how many things they've actually reviewed. So while we would love for the numbers to be decreasing even faster, you can see this team is working extremely hard to get these filings reviewed so that you can start using your products. Now, I know a number of people have asked, okay, well, what can be done to speed the process along? So there are a couple of things that Aaron and Marsha's team have requested. Make sure on the rate side that when you submit that filing in SURF, you've provided the full actuarial support. So if there's actually support for what you're requesting, submit it. Because if it's not submitted, then Aaron and his guys are going to have to come back, and that's going to delay everything. Also, make sure that you include all of the factors and the indications in that filing. And one of the things that Aaron suggested is if you have a team of actuaries, maybe ask somebody else, another member, to do a review of the filing before it's submitted. That may help move things along. If we come back to you with additional questions, make sure that you answer all of those questions and fully answer the questions. If you don't understand a question, let us know that. We're more than happy to work with you, but if you don't respond, all that's going to do is to further delay the review process. And the most important thing is making sure that if there's some reason that do not wait until the last minute to make your filing. Give us plenty of time, but also please understand that we're working, as you have seen, as quickly and as diligently as possible. So please we want to get your products to market as well, but just please understand that we are working as hard as we can to get these things processed. And that's all for me, Commissioner.
Thanks. Let me maybe chime in with a couple more thoughts about the rate informed filing process and review. I think folks know, or many of the folks in the industry know that we had lost some members, key members of our actuarial team in 2024. And so we've done great work in the past year. We have a wonderful new chief actuary of PNC, Erin Levine, that Joy mentioned, who is doing just terrific work. And quickly, we are at a point where we are, as those numbers that Joy shared, where we're eating into the backlog. To fully resolve the backlog is going to take time. And to Joy's point, we are dedicated to doing that. We are putting a lot of resources to that. We are seeing if there are more resources we can put to it. But that's not going to stop us from doing the careful review that we need to do to protect Marylanders. So I just want to be very clear about that. Nancy asked a question about the oldest open Kate, what is meant by November 29, 23 oldest open. I think that means that that is our oldest open file that is still open and not yet closed. Okay. Any questions about that or perspectives folks want to share? I know that's a hot topic for our industry partners. I guess the one extra thing I'd say, if you have a complex filing that is coming before us, definitely feel free to reach out, sit down before the filing is submitted. Our team is always happy to talk about those kinds of filings, and I will make sure you know that you have that open door to do that before you officially submit. Okay. Well, I'm going to give a quick little update. Just we have a couple of items on auto affordability we've been working on. First of all, the MIA and Maryland Auto submitted a joint JCR response on rate assignment by zip code. that we just recently submitted to the budget committees. It was a requirement of our joint chairman's report. And we've also been working really hard this fall on the private passenger automobile insurance affordability work group. Our next meeting is next week, where we're really going to be looking into industry profitability and having a discussion on where our recommendations will go. So I'm going to see, Craig, can you plop information about that work group in the chat?
Yes, we'll do.
Okay, great. So those are, the work group membership itself is small, it's set by statute, but the meetings are open to the public, and would just encourage folks to attend if they are interested. With that, let's see if there are any questions, and if with that, I'll turn it over to Jamie to talk about our legislation for this year, as well as some requests from the industry on legislation. Oh, sorry, Jamie, before I leave that, someone has their hand raised. Hold on. I can't see who it is, though. Oh, it's Nancy. Craig, can you move Nancy over?
Sorry, Jamie, you're just going to have to. I was trying to send a question when Joy was speaking, and it wouldn't let me send the question. I was wondering if Joy, and it doesn't have to be right this minute, could give us an update between what the current turnaround time between when a rate is rate filing is filed to when it is acknowledged, because we had seen some issues last year where people were filing and were not getting acknowledgement for some time. So anyway, you don't need to reply now, Joy, but if you have that information later, I appreciate it.
So I would say, Nancy, that currently, cannot speak to what happened in the past, but currently that acknowledgement should happen very quickly. And that acknowledgement is going to happen in SURF.
Right.
So if one of the carriers, files something in SURF and within a week they haven't heard, send me an email and I will look into. Now that's merely the acknowledgement, but send me an email and I'll look into it. But give me a week.
That's great. Thanks, Joy, because I know that you had issues in 2024. So this is great news. Thank you so much. And I'm sorry, I was trying to chat. I just failed.
All good. Thanks, Nancy. Okay, go ahead, Jamie.
Thanks, Commissioner. The Commissioner's final point about the private passenger auto work group is actually a wonderful lead in to this first topic they're going to be talking about with regard to our departmental package. As you guys see on the agenda, we are going to have a couple of bills in our departmental package this year related to property and casualty. The first one deals with private passenger automobile affordability. There's not a lot that we can share on this bill yet. It's actually still in development. This bill is going to be the legislative vehicle for some of the recommendations that will be coming out of the PPA work group that Commissioner Grant mentioned that we are staffing and she is chairing. So be on the lookout for that. That work group has not come to consensus yet on policy recommendations. They're going to be made, but we are looking forward to using this bill as a vehicle for some of those recommendations. And so if those of you that are involved in that work group, you'll be hearing more. Others of you that may not be involved in that work group, those meetings are public, so I certainly encourage you to attend. I believe our last meeting, we're going to be talking through the building of consensus on some of those recommendations. So more to come on this bill. The next one deals with fairness and affordability of property insurance. So this bill does two things to enhance fairness in property insurance. First, it's going to be requiring an insurer to notify a policyholder at least 45 days in advance of each renewal of a policy of homeowners or renters insurance if any of the coverage under the expiring policy is going to be reduced or eliminated under the renewal policy. Now, this stems directly from our complaints data. These are concerns that we are hearing from Marylanders, and so that's why we're seeking to address that through this legislation. The second thing this bill will be doing is prohibiting an insurer when handling a first-party claim under either residential or commercial property insurance policy based on the actual cash value of the property from treating the expense of labor, which would be necessary to repair the property, as having been depreciated. So I don't think this is terribly new concept to many of you, that this is something that's been of interest to the MIA. It's our standing that unlike physical goods and materials, labor doesn't wear out or lose value over time, which is why we're seeking to address that issue in this legislation as well. So those are the only two P&C related departmentals that we will have in our package this year. But we did have a couple of questions from industry about topics you'd like covered. First was third-party litigation funding. We know this is a national concern. This is actually even touched on a little bit in that work group that Commissioner Grant mentioned, our PPA work group. We are monitoring what's happening federally on this. That bill largely focuses on IRC updates. To my understanding, there hasn't been a lot of movement on that legislation, but we are monitoring that very closely. We're also going to be closely monitoring legislation that comes to fruition around this issue this session. There was legislation that dealt with this issue this past legislative session. Many of you on this call will know that we did not take a position on that legislation in the 2025 session. But it's really hard for us to definitively say whether we would or would not take position on a bill this coming session until we see the language. So as that comes better into focus, we can certainly provide better concrete information as to what the MIA may or may not do on such a bill. The other issue that was raised from industry in preparation for this meeting was the Maryland reform effort related to roofing contractors' unfair trade practices. I believe the verbiage that a lot of members of industry have used is a storm chaser legislation. We were provided with language regarding a concept for legislation based on the INCOIL model. We did not see any major issues with that language, but we did highlight that we do want to have a discussion about any provisions that are addressing solely the conduct of contractors before those are placed in the insurance article for, I think, pretty obvious reasons. So if that's the intent, we would certainly want to discuss that further before language was finalized. We would love the opportunity to review the bill language once that is better into focus and once that is better reflective of exactly what is going to be introduced this session so that we can provide technical guidance. As with the third-party litigation funding legislation, it's hard for us to definitively say how we would or would not take a position on a bill until that language is better into focus. So we really look forward to working with you guys as you finalize that legislative language so that we can review that better. I know that was quick, but if there are any questions, happy to answer them. I'm also happy to provide any follow-up later if asked.
Jeannie, there's a question in the chat from Kelly Suling.
The depreciation of labor bill, that will deal with homeowners insurance or renters insurance.
It does apply to
sorry.
commercial property though, too. Yeah.
Excuse me, yeah, you're correct. I'm sorry, I was looking at the provision that dealt with renewals. Correct, yes, it will deal with residential or commercial property insurance.
Any other questions for Jamie? Any hands raised? I guess any comments? Nancy, oh, there you are. Still on this side. Nancy, just any updates on what the industry might be pursuing this next session?
The two bills you raised, APCIA is taking the lead on the third-party litigation financing. We're trying to take last year's bill and make it more streamlined because it's such a difficult issue. Again, there was a lot of pages and that always makes it difficult. So we are working on redrafting that, and we did share with you the storm chaser, and I'm actually having a call to make this more clear so I can resubmit, and would love to welcome a call to go through it again. So I appreciate that.
Thanks, Nancy. Nancy, there's a question, I think it's for you about the proposal for contractors, including the preferred vendors sent out by insurance companies. I think Nancy went back over to the other side, so if she comes back, we'll try to get to that question. Oh, there she is. Nancy, are you able to respond to that question now, or?
Wayne, I'm not too sure what you're meaning to preferred vendors sent out by the insurance companies. This would apply to all home improvement contractors. So it would be licensed home improvement contractors.
Okay. Anything else, Jamie? I will say, so on the property insurance legislation, I think once we're able to share that text, right, Jamie, we can, we want to make sure that we're working through as many issues as we can before the session. So look forward to having a continued conversation with all of you about that. Anything else on that topic, Jamie? Oh, we can't hear you. You may need to mute and unmute.
Can you hear me now?
Yeah.
Wonderful. No, I don't think so. If anyone has any questions, please don't hesitate to reach out. As the commissioner mentioned, we're not in a place where we're allowed to share language just yet, but once we are, would love feedback.
Okay. So next up, I'm going to turn it back to Joy to give an update about 2025 regulations that we're working on.
Thank you, Commissioner. So I'm going to start with one of the regulations that's already effective. It actually was effective as of June 1, 2025. And that was the regulation to make sure that all of the carriers were properly sending out the notices of cancellation, non-renewal, reduction of coverage, and premium increase. I think at some point there was some confusion as to when notices had to go out, under what circumstance, and that regulation was intended to clarify that. So I think we've been working with a number of companies over the last few months, going back and forth, trying to make sure that they fully understood, and where the notices had not been going out properly, we have worked with them to get them to withdraw those particular actions. And I think in the very beginning, someone asked what steps were taken if we found that there was something that the companies were doing improperly. Well, this is one of those instances. There we found instances where either the notices either should have gone out or didn't contain the correct information, and our complaint team, through their investigation, had those particular notices overturned, and the actions, the carriers were not permitted to take those actions. So that's been in effect since June 1st, 2025. The next thing is a new regulation that we are proposing. And the time for comment, because what we do, for any of you that really follow the MIA, if we, generally speaking, before we put a regulation into effect, we give the companies an opportunity, or any interested party, an opportunity to comment on that regulation. And sometimes we take those comments, we make changes. There are actually instances where we may think, well, we're not going to go down that road at all. So I would encourage everyone to take advantage of the comment period. What we are doing under this regulation is something that for any of you that have been around for a while, we're going back. There was a period of time that we would require that carriers filed their underwriting standards with us prior to implementing those underwriting standards. And then we stopped doing that. Where we're proposing to go back for both private passenger auto and for homeowners insurance to start requesting those underwriting standards be filed with us again. And the effective date for homeowners would be July of 2026, and for private passenger auto, July of 2027. And once again, I would stress, if anyone wants to comment on the regulations as proposed, please submit your comments before November the 11th. And that's all I have, Commissioner, respect to the regulations.
Great, thanks, Joy. I wanted to see, so there's a question, so we have a comment, good idea on the underwriting standards, especially with the increase of AI, so thank you. Lauren Peckman from Allstate is saying November 11th was yesterday. Is it 12/11?
I will have to look back, but I believe the date, and actually, if I could ask
Oh,
Katie,
Nancy, yeah, I was like, the
24th?
agenda says November 24th. Nancy says it's,
that's a typo. But
okay.
just if Katie could double check behind me, I don't trust me. Yeah, and Katie's gonna put in here the date.
So the comment period closes on November the 24th, and I just dropped a link for everyone to see. You can see the draft regulation as currently proposed, and as well as instructions for how to submit your comments.
Great, thanks, Keith.
Thanks, Katie.
So November 24th. Let's see. Sonia Allen is asking if we can provide the statute for the notices. And Sonia, if you can be a little more specific and we can try to answer your question. I'm not sure which notice section you're referring to. Oh, she got the statute in the link. Great, perfect, thank you. Okay, any other questions or feedback folks want to share on this call? On those topics? It's quiet here, but I expect some feedback. So we look forward to that. I'm gonna give it one more second. And then, okay, Joy, you want to continue on with the bulletin section? Or do you want me to talk a little bit about?
I was going to say, Commissioner, if you want to address Bulletin 2516, that would be wonderful.
Great. So I just wanted to express my appreciation. We sent out a bulletin to all of our insurers about cancellations due to non-payment of premium, given the partial shutdown of the federal government, how that is impacting Maryland, how it's impacting our federal employees, but also contractors, folks who may depend on the federal government. And then recently, of course, with the SNAP uncertainty many families were facing, we received a number of a lot of information from our carriers about all the different accommodations that they were making proactively and voluntarily for Marylanders. And I just want to express my deep appreciation and say thank you. Thank you for making sure that your companies are helping out Maryland policyholders in such a critical time. again, vast majority of companies indicated that they were making accommodations for folks one way or another. So really, really appreciate that. With that, I'm going to turn it over to you, Joy, to talk about the other bulletins.
So, as many of you know, we had issued a bulletin contemplating changes to basically make 27501 into applicable to commercial insurance policies. We had a comment period, and we heard lots of different comments from the industry. We are still reviewing those comments and are making a decision as to how or if we will proceed. At this point in time, no decision has been made. We are still reviewing. As soon as we make a decision one way or another, we will definitely be back in touch and give you plenty of time to make any adjustments. As I said, if we come to the conclusion that we will make it applicable to the commercial insurance policies. So this is one of those times where send in your comments. We review them and we listen. The next one, and Craig, actually, if you could bring up my telematics slide. While Craig is, I sort of did this, I apologize, Craig. I sort of did this in a halfway because I've got different pieces. The next bulletin is trying to clarify the use of telematics and the notices that are required. And this slide that I want to show you is going to show you the volume of complaints that we receive related to telematics. So if you can see, let's start at the closed complaints. From 2022 to 2025, 8.55% of the complaints that our agency received related to telematics. That's a large percentage. Now, the reasons for those complaints are vast. A lot of people either didn't understand that certain things would be included, they don't like the rates, but for many things. But for the percentage of the complaints for one issue to be almost 9%, that tells you that's a huge issue and something we need to wrap our arms around. Now, if you look at the pending complaints, 40.16% of the complaints that are pending, those are the complaints that we're trying to work through to close, relate in some way or another to telematics. So, from our opinion, in the complaint world, we need to do more to help consumers understand in those notices. We need to make sure that those notices get to those consumers so that we can see these percentages decrease. So that is the reason for the proposed bulletin to clarify the notices when it comes to telematics. The comment period, and I think I've gotten this one right, Katie, but if you can check me, please, closes on November the 24th. But I would ask everyone that uses a telematics product to work with us, because the quicker we can resolve all the issues and make sure that consumers are aware, I truly do think that our number of complaints will be reduced. And that's all I have, Commissioner.
Thank you, Joy. Any questions or comments from folks on the phone? And this slide is telematics, a subset of private passenger auto.
Yes.
Okay. Any other questions or comments? Okay. So, the last item on our formal agenda is, I just a little bit of insight into what we're thinking about for next year for 2026. First of all, it is likely that are going to have a public hearing series on the availability and affordability of certain lines of liability coverage. We've heard from an association representing child care centers in the state of Maryland that these centers are increasingly having a difficult time finding liability coverage on the market, are seeing really high rate increases. And my understanding is this is not a Maryland specific trend. It is actually national. It's something my fellow insurance commissioners are wrestling with. So we're likely to have a hearing on that next year. Also, just a flag in our most recent medical malpractice liability report, we're seeing not an unavailability of insurers, but we are seeing an increase in use of self-insured arrangements or risk retention groups. And it's something that we want to keep an eye on just to make sure that folks are able to access that important coverage in Maryland. And then the last item is, I think there's significant interest from multiple parties, multiple agencies, multiple legislators in making sure that we can do everything we can to protect our home insurance market. I think Maryland's home insurance market is strong. We have data that's come to us through the NAIC. We have our own market hardening report that we put out last year, where again, signs are strong, but there may be changes in underwriting standards. There may be sort of cracks showing up. We have seen a jump in cancellations and non-renewals. And so we want to make sure that we're doing everything we can to protect this market in Maryland and make sure that it stays healthy and available for Maryland homeowners. So that is our agenda. And again, we have 120 attendees on the call. So I am sure folks have things they want to bring up. So I want to open it up and see if anyone has anything they want to share. If you'd like to speak, raise your hand and we'll move you over to the panelist side. And then also you can feel free to use the chat function as well. So I don't see any raised hands. I'm going to give it a second. Oh, Gloria Singletary. Craig, can you move Gloria over? Hi, Gloria, go ahead. I think you're on mute. You able to get off mute?
Oh, there you go. I'm sorry.
It's okay. There you go. Great.
Okay. Yes. So there was stuff mentioned earlier, some comments about the contractors in particular, roofing contractors and storm chasing, so to speak. I did have some questions on how, oh, hold on, I'm sorry, get to my questions. How different things were affected with that as far as the increase in premium due to insurance fraud and different things of that nature with these contractors and the complaints and the process or how that's handled. If that.
Yeah. Joy or Mary, do you have, well, a couple of things. So I think when we talked about the contractors, Gloria, this is legislation that I think APCIA is pursuing. I want to make clear that's so an industry piece of legislation. Nancy, are you on? Can we move you over to comment maybe on how the legislation would work? So I can talk a little bit as Nancy's moving over about how we handle some of those complaints today. I think we can handle them in the context if they involve anything that crosses the line into public adjuster behavior that requires a license from the MIA. We can also investigate fraud. We can and do investigate concerns and reports about fraud. But our regulation at the MIA really touches folks who are part of the insurance industry. So whether that be insurers, brokers, public adjusters, those kinds of folks. Okay, go ahead, Nancy.
Hi, Gloria, and thanks
Hi.
for your question. We've been hearing from several of our insurers that they're seeing contractors offering to pay or absorb an insurance deductible for the property repairs, which is sort of an inducement when handling the repairs. Also, the offering the property owner consideration to perform roof inspections or filing insurance claims on their behalf. Then offering them anything of value for referring them to another person to do roof inspections. And in many ways, they're acting like an adjuster on the claim, which is beyond their scope. They should be licensed. So those are the areas we want to talk to. We've heard where these roofers will come in and say that a whole roof has to be replaced and guarantee that they're going to get that from the insurance company, which obviously they don't have the ability to adjust a claim on behalf of the consumer. They're not licensed adjusters. So those are the areas we're hoping to address. I mean, obviously, when people are submitting fraudulent claims, that always is going to impact the price of homeowners insurance. Specifics I couldn't provide you, but there was a national model that has been developed by the coalition of legislators that we're using to draft our legislation. So we're hoping to present it this year. I think you'll also see that in Baltimore City, Odette Ramos was involved in some legislation. Our legislation only has to do right after a natural disaster declared by the governor. But there was some legislation that was just passed by Baltimore City Council that had to do with a series of, well, there was a fire in Hamden where a bunch of row houses were impacted and they had people there approaching the homeowners to do repairs, I mean, at the time of the loss. And I know they passed some legislation to deal with that just, I think, in the last 2 months. So we're seeing that where people are vulnerable and we want to make sure that they make informed decisions when they're involved in a claim. So I hope that answers that. But the final draft of that legislation isn't available yet.
Okay. You had mentioned about the salesman acting as a public adjuster or having public adjuster behaviors. Now, where would that type of complaint go? If you have it where that's, you know, that's
I think
happened, where would
if
that type?
someone is acting to adjust a claim and they aren't licensed, then it would go to the Maryland Insurance Administration.
That's correct.
Oh,
Yep.
Okay. Also, one more question on that. What about this, when the contractors are including the certification, or the certificate, or the certification of completion certificate, when they are including that with the initial contract?
I'm not too
And
sure. If you know, if you want to ask me offline, that would be
okay,
fine.
sure, good.
That would be great. I know that you know you have two different agencies that would be involved. That with the Maryland Home Improvement Commission is very much involved,
Right.
and the MIA. And I know Joy Hatchett knows about this. That we worked when I was with the MIA. We worked on a with the Maryland Home Improvement Commission to develop some talking points for contractors to make sure they didn't move into an area where they were starting to try and negotiate claims when they weren't licensed. So,
Okay.
so that's the two dual heads that have to do with sort of looking over the behavior of contractors. I hope that helps.
Okay. Oh yeah, great. And we can talk again, like you said, off
All right.
camera.
Thanks, Gloria.
Thank you.
Thanks,
Bye-bye.
Commissioner. Sorry.
All
Oh
right.
yeah, no, you're okay.
I keep
Thanks,
getting
Gloria.
moved back
Great
and
question.
forth.
Yeah, just stay there. Just stay there.
Okay.
Gloria, thank you so much.
Okay.
Those great
Okay.
questions.
Thank you.
Any other folks with questions or feedback? Okay. There is some discussion in the chat. The next private passenger auto affordability work group meeting is going to be Tuesday, November 18th, 2 p.m. We'll make sure that the website gets updated with all of that information. Anything else? Any other questions? Comments? Okay. Well, I want to thank everyone for all the great participation. All of your feedback is really helpful. We look forward. It's going to be a busy, busy next couple of months, busy session, busy next year. But if there's any questions at all, we can answer. And of course, we always continue to want the feedback from everyone on this call about what you're seeing out there and how we can best protect Maryland consumers and policyholders. So thank you, thank you, thank you. Thanks to my team for organizing this. And I'm happy to give you a few minutes back in your day.